Hello and welcome to Capital Ideas TV. I'm Mark Bunting. All parents want their young children to live healthy, active lifestyles, and to do that, they need clothing that can keep up. Peekaboo Beans says it designs clothes with exactly that in mind. They say they're durable yet stylish, environmentally friendly, and affordable. The company has been using a direct selling model to put its product in parents' hands, and now it's broadening its marketing horizons. It's taking an omni-channel approach, and for good reason. Here's a look at the most popular places consumers buy their goods. Pay attention to the dark and light blue bars. They represent millennials and the younger Generation Z, respectively. Those age groups are now starting families and are therefore in the market for children's clothing. They're buying through online marketplaces like Amazon and eBay and social media sites like Instagram and Snapchat, as well as brick and mortar stores. Thus, retailers need to be present just about everywhere to cater to their most important clientele. You might think having all those commerce channels is a drag on the bottom line, but that's actually not the case. In fact, it pays to be present across the shopping spectrum. Data from Criteo suggests customers that shop across many of a brand's channels are far more valuable than those that use a single avenue. Omni-channel shoppers account for 27% of sales, despite representing just 7% of the customer base. Meanwhile, a study by Aspect Software found that retailers which offer an omni-channel experience retain 91% of their customers. Another study by the Aberdeen Group shows omni-channel retailers see a 10% bump in their revenue and an 8% decrease in cost per contact. With all this hard data backing up its decision, Peekaboo Beans adopted an omni-channel approach earlier this year. The benefits were almost immediate and continue to grow as the company expands further into the U.S. market. CEO and founder Traci Costa recently joined us to discuss the progress her company is making and how the shift to omni-channel is going. Traci, any good CEO and any good company knows how to pivot. They're willing to do that. You've done that. You have an omni-channel strategy now. So why did you do that at Peekaboo Beans, and what are the benefits you've been seeing?
Well, we really wanted to streamline the business and strategize for long-term growth and profitability. And there was three things that really indicated that for us. The first one was data, pure data. What we wanted was our stylists to hold in-home parties, but what they wanted to do was host online parties. So we wanted to look at that pure data and say, this isn't working, and how can we leverage what is working? The second thing is technology. The direct sales software that we had in the past is very archaic, and we've moved to a Shopify platform, which over 700,000 companies are on a Shopify platform, and the technology is just amazing, and it's really supercharged the business. And then the third reason is the marketing landscape of the retail world is fundamentally changing, and people are really looking to influencers, to social media, to Instagram influencers who are providing their value-based referrals on products and what have you. And so we really wanted to tap into this affiliate type model where we could have reach to millions and millions of people through Instagram influencers and other social media outlets. So at the end of the day, the pivot was really to grow revenue, broader distribution, streamline our cost structure, and utilize technology to really supercharge the business. And we're already seeing the effects of that right now. It's unbelievable. It was a very, very good move.
The Shopify angle is really interesting, and you touched on social media influencers. I have daughters. I know how big it is for them and how these influencers can really affect brands. And so you're really trying to tap into that. How are you trying to tap into it, and what kind of results are you seeing?
In the olden days, you might have the Mr. Clean and the mom, cleaning the tub or mopping the floors or what have you. And the millennial generation is shopping so much differently now. And they have the highest spending last year, over $200 billion spent by millennials. So they're really looking at aligning with influencers or Instagrammers that have the same values of them. And 62% of millennials will say that they'll be more engaged with a brand through an influencer, through an Instagram influencer or a social media influencer. Now, how we're tapping into that is now we've actually been able to monetize that for those affiliates. So for example, if an Instagram influencer does a shout out of Peekaboo Beans and our product, now instead of just shouting it out and having no way to monetize that, we have plugged in our affiliate model a program in which they can swipe up, and now anyone can, who's of the millions of followers or thousands of followers that are on their platform, can swipe up, and that Instagram influencer now will get will be monetized for that.
Right.
So it's kind of like an affiliate model. Sometimes they do pay per click, sometimes they do it per sale. That's how we're leveraging that. And we're also growing on a ground floor level with our social stylists. So we have ported over our stylists into our new affiliate model, and they're able to utilize their social media outlets to be able to monetize their business as well through technology.
Now, as far as the stylist, I understand you've introduced sort of a lower cost structure whereby it's easier for people to get involved.
People didn't want to host in-home parties. We're busy now, we're a busy generation, we have lots going on. So how can we leverage technology to be able to do that? So with that, we've streamlined the hours that they're now putting into their business. We're making their cost per hour more effective. They're making more money, but we were able to really streamline the cost structure because with this model, it's the technology is so intuitive. We don't need as much resources to be able to drive the business. So we've reorganized, we've restructured, we've cut our costs. Our commission levels are better now and more favorable for us. And it's all about revenue and profitability sooner than we had hoped. So.
And another change you've instituted, loyalty programs. Explain these for us, and how are they driving sales?
We have a Bean Club membership now that is $49, and so for us, that's reoccurring revenue. And for a customer, they get 15% off and free shipping. Well, what we've seen with this loyalty program is, for example, in November, we had an 85% returning customer rate. So what that means to us is that when somebody becomes part of the Bean Club and they have a loyalty to the brand, and they will continue to come back to the brand because they know they're going to get their preferred member discount, and also they're going to get free shipping. An 85% returning customer rate is exceptional. So we're really, really proud of those numbers.
I bet. Another strategy you're instituting are pop-up stores. You've got one up and running already in Delta, BC. So why pop-ups? So why are they important, and what sort of benefits are you expecting?
The consumer likes to shop in multiple different ways and different touch points. We have seen in the past when we've popped up shops across North America, we can generate upwards of $50,000 in a day or two. It's great because we can have low-cost space in prime locations for a short period of time and give something to come in and touch and feel and have that brand experience. So in the long run, I would definitely like to see an experiential type store, like a Build-A-Bear, or Starbucks is now implementing these experiential type Starbucks stores where there's lots going on and involving their consumer in that. So I see it as a long-term strategy, and we're testing it out right now.
So we can long-term expect one or more Peekaboo Beans stores, brick and mortar.
I would definitely like to see that. I envision the on steroids play zone for kids where moms can bring their kids and they can play and they can have a coffee and shop and really become ingrained into the brand and the Peekaboo Beans culture, and have that as another revenue generating source.
We've talked before about your push into the United States. So can you update us there, especially in terms of the growth you've seen in social stylists? It's triple digit, isn't it?
Mm-hmm. We brought on probably 300 social stylists in the US, and we were represented in 34 states. So with this technology and with our marketing campaign, we'll continue to push into the United States and bring more affiliates on through the influencers, through technology. We just signed on with a digital marketing company called AdCore, and it's like supercharged digital marketing and have shown results of like doubling your revenue based on their platform of machine learning and digital media. So more reach into the US. We have a lot of opportunity to build out that $36 billion market space of children's apparel.
Now, 2018, you said, was all about stylist growth. So you're explaining all these changes you've made at Peekaboo Beans. What does 2019 look like with all these different strategies incorporated? especially in terms of revenue prospects and your path to profitability?
I think that at the end of the day, our product is the backbone of our business. We have a high quality, amazing product that children love to live in. And so for us now, it's really about more eyes on the brand, more eyes on the product. And that would be through growing our Bean Club membership. We already have over 2,000 Bean Club members, including our social stylists. And then also building out more affiliates, more influencers, and reaching a wider audience.
Lastly, Traci, you're describing a lot of good things going on at the company. It's not reflected in the stock. The markets aren't recognizing it right now. So what do you say to investors to say, hey, pay attention, no, we're looking pretty good here?
Like any business, more eyes on your business is going to be more sales. More eyes on the stock means more interest on the stock. So for us, it's really about growing that investor base and putting more eyes on the company. I would call us the diamond in the rough right now. We're really, really well positioned right now. We've got a solid distribution model. We have extremely relevant technology that's supercharging our growth. We have reoccurring revenue model now, and we've got strong revenue growth, and we're at a valuation price. It's a great opportunity for investors at this stage, definitely.